Hey, good morning, everyone. Marty Missouri here. It's the 29th of August, 2019, your pre-market update. As you can see, we have a nice rally going here at the open, and as you should suspect, it has to do with trade news. This time, news out of China that they are indeed ready and willing to get back to the negotiating table, although they do have couple of conditions. One is essentially they want the tone to change. It needs to be calm, needs to be balanced, needs to be consistent, no big surprises. I think what really got the market inspired this morning is that they announced that they're going to delay any retaliation on the latest from the US. If you'll recall, on Friday, China announced their retaliation to what you would call the surprise tariffs, meaning we were all surprised when the US ratcheted it up and added 10% to everything that China imports, everything that wasn't already tariffed. And then some exceptions and some delays came later. But Monday, a good chunk of those go into place, along with a ramping up across the board based on how the president reacted to China's retaliation on Friday. So they suggested that they're not going to match that at this point. And they also suggested, though, that they really think that that should be voided or rolled back, if you will, before they can really have serious constructive talks. So now the ball's in the US's court. So we'll see how that plays out. I can tell you that, of course, the stock market would love that news. That would be very bullish, and I think that would push us right up here through this strong level of resistance that the market continues to butt its head up against. Again, without good trade news, I think the technicals were strongly suggesting that we were ultimately going to resolve lower. But as I've been telling you, it can go in either direction, and it would take trade news to get it to move decidedly up above this area. Make no mistake, folks, there was a lot of shorts hanging out in here. We had resistance right there about halfway up this candle. That's a technical level as well. So those shorts got blown out of the water on that news this morning. So they covered, and that has a lot to do with the extent of this rally. When the market opens here in the cash session here in a few minutes, it'll be interesting to see if there isn't more of that or if we don't pull back off of this and so on. Notice that I have a trend line here that I added this morning because that's a very definite trend line here. We've got four touches of it, 5 touches of it right here, and we're touching that this morning. So for sure, technicians are taking a look at that. You can see we went through it, and we're the bulls and bears are kind of in the futures market battling along that line. We get through that, and then of course this is the key line of resistance here in the near term. We get through that with some force, there is a mountain of shorts, make no mistake, sitting just above this line, and it's been very profitable for them to sell this market right in here. So they're sitting there. You're going to see some resistance right in here virtually no matter what. You get through there with some momentum, more good trade news, you'll see those shorts cover, and then we're off here and ultimately maybe threatening all-time highs. Clients, I made it very clear that the conditions have deteriorated. I posted on that last night, and I posted something again this morning, and I'll show you that here in a second and when I wrap up. And so we're really not in a position that we can look at these longer term divergences and the technicals and so forth, and I'll show you those, no doubt. But we just have a lot of undoing to do of the technical damage to start feeling bullish again in the near term. Fundamentally, stopping adding tariffs right here, rolling back the most recently added tariffs will be bullish for stocks, but they won't be ultimately bullish for the economy. We've got to get a complete rolling back, not only of the tariffs that have been added over the last year, but of the narrative, if you will, or of our approach going forward. Protectionism at any time is economically destructive. At this stage of the cycle, and what the things that are really troubling under the surface, which I'm talking more and more about on the blog, a near-term recession becomes something very, very ugly as it hits the credit markets. And that's that stuff under the surface that concerns me. And we have to be guarded against that as money managers at this stage. And then just in closing, I'll let you go. This is the chart I posted this morning. Wall Street Journal does a survey of economists. Just had its highest reading ever in terms of probability for recession odds. 35% may not sound like, all that much. Um, but again, it's a record for this survey. It looks like this survey began back in 2011. It's another one we look at, the U.S. recession odds. It's also right around 35%. That's the highest of this particular expansion. I think what's in there is an assumption that we're going to end the trade war and get friendlier in terms of trade conversations going forward. Because I can't believe that any economist who's looking at the data and looking at the deterioration and where it's coming from, that wouldn't give much higher odds over the next 12 months of a recession. I would say it's close to 100% if we have the same kind of experience around global trade over the next 12 months that we have in the last 12 months. If that gets pared back measurably, I'm going to be sounding much more optimistic in a much more favorable tone here and on the blog, and we'll be accommodating for those odds in client portfolios. Right now, we've got to be guarded for a lot of real good reasons. It's okay to give up some upside to protect against what could be unusually ugly downside. Right now, we're seeing again that first round of short covering at the open. We'll see if that lasts, and we'll see how this trend line holds, and then ultimately this resistance line we'll be talking about if this keeps up over the next day or so. Thanks as always for watching and listening. Talk to you again very soon. Bye bye.